Have you ever wondered what separates billionaires from the rest of us? Is it just luck? Or are they playing a completely different game, one where the rules aren't even written down? In this video, we're diving deep into the 12 secrets that billionaires know and use to create massive wealth. These aren't your typical get-rich-quick tips. We're talking about the real strategies that shape their empires and give them an edge over the rest of the world. By the end of this video, you'll see why the rich don't think like everyone else, and how you can start thinking like them too. Welcome to Financial Roadmap, where your journey to wealth begins. Ready to unlock the billionaire mindset? Let's get started. 1. You don't need full ownership to be a billionaire. Many people assume that maintaining total control over their business is the way to massive wealth, but billionaires know better. You rarely reach a billion-dollar valuation and still own 100% of your company. Take Jeff Bezos. He owns only 12.7% of Amazon, yet he's one of the wealthiest people in the world. Elon Musk holds 13.3% of Tesla, and Bernard Arnault owns 46% of LVMH. Billionaires understand that owning a smaller percentage of a larger pie is often much more lucrative than owning 100% of a small business. By giving up some equity to investors or partners, they are able to scale their companies faster, multiplying their wealth in the long run. 2. Crises create wealth opportunities. Billionaires view crises as opportunities, not setbacks. While most people panic during economic downturns, billionaires see them as Black Friday for investments. Take Warren Buffett's approach during recessions. He has been criticized for sitting on piles of cash that seemingly lose value due to inflation, but this is all part of his strategy. When the market dips, Buffett and other billionaires can buy companies, stocks, and assets at a fraction of their value, knowing they will eventually rebound. This is how the super rich operate. They make a few strategic plays each decade, timing the market when everything is on sale. 3. Billionaires favor art for storing value. You might be surprised to learn that art is a favored asset among billionaires. When you have that much money, it's often locked in stocks or hard-to-move assets, and keeping too much cash on hand can erode your wealth due to inflation. The ultra-wealthy prefer to buy blue-chip art, which not only appreciates in value, but can be leased to museums or kept as a bargaining chip. It's far easier to move $500 million in art than the same amount in gold or other commodities. Fine art is known as a billionaire's asset for a reason, as it provides both portability and a hedge against inflation. 4. Use others' money to grow wealth. If you want to become a billionaire, you can't rely solely on your own funds. Billionaires master the art of using other people's money, or OPM, to grow their wealth. They attract investors, banks, and venture capitalists to fund their ideas, scaling their businesses without depleting personal funds. For example, a founder might raise $100,000 in exchange for 20% of their startup, instantly valuing the business at $500,000. As the company grows, further rounds of investment increase both its valuation and the founder's net worth, despite owning less equity. This cycle continues until the business is worth billions, and the founder has become a billionaire, all without using much of their own capital. 5. Stocks won't make you a billionaire. While investing in stocks can lead to wealth accumulation over time, they are unlikely to make you a billionaire. The stock market requires significant starting capital and a long time horizon for real growth. While you may hear that investing $5 a day can make you a millionaire by retirement, the reality is far less glamorous. Warren Buffett famously bought his home in 1958 for $31,500. Today, it's worth close to $877,000. Simply due to inflation and rising market values. While this sounds like a solid return, it pales compared to what billionaires achieve through more aggressive and strategic investments, such as private equity and entrepreneurship. 6. Private equity is key to billionaire status. Real estate is often touted as a surefire way to wealth, and while it's true that many millionaires are made through real estate, billionaires take a different route. Private equity and business ownership are what set billionaires apart. Billionaires focus on owning and growing businesses, then using the profits to invest in other companies. By leveraging private equity, billionaires are able to multiply their wealth much faster than by simply relying on real estate investments, which tend to offer more modest returns over time. 7. The most valuable asset is time. Billionaires understand the true value of time. They delegate tasks and hire experts to handle various aspects of their businesses, from financial advisors to legal teams. They focus on high-level strategy, surrounding themselves with people who can handle the details. This frees them up to think about scaling, innovation, and long-term growth, rather than getting bogged down in the day-to-day operations. Time is the one resource billionaires cannot buy more of, so they use it wisely by outsourcing everything that doesn't require their direct attention. 8. Buy low, sell high is the strategy. Every billionaire is in the buy low, sell high business, whether they're dealing in commodities, tech, or services. The goal is always the same: find undervalued assets, acquire them at a discount, and sell them for a profit. Billionaires optimize their businesses by either increasing their markup or scale, sometimes both. For example, Amazon operates on slim margins, but compensates for this by doing millions of transactions. On the other hand, luxury brands like LVMH sell fewer items, but with much higher profit margins. The key to building wealth is identifying where you can either sell more or charge more and executing that strategy to perfection. 9. Billionaires create millionaires. Billionaires aren't islands. When one person becomes a billionaire, they often create opportunities for others to gain wealth too. For example, Peter Thiel was an early investor in Facebook, putting in $500,000 for a 10.2% stake. When Facebook went public, Thiel sold 2/3 of his shares for $628 million. Similar stories exist throughout Silicon Valley, where early backers of companies like Coinbase or Airbnb have seen their modest investments skyrocket into fortunes. As a new billionaire's company grows, so do the fortunes of everyone who believed in their vision from the start. 10. Less than 5% of wealth is liquid. One of the most misunderstood aspects of being a billionaire is liquidity. The average person imagines billionaires sitting on piles of cash, but the reality is quite different. Most billionaires are paper billionaires. Their wealth is tied up in the shares of the companies they own or control. Typically, billionaires keep less than 5% of their wealth in liquid assets. When they need cash, they don't sell shares. Instead, they use them as collateral for loans. For instance, when Elon Musk bought Twitter, he didn't sell off Tesla shares to raise money. He secured financing from banks, using his assets as collateral. 11. Experts minimize risks and maximize returns. No billionaire gets to the top alone. They surround themselves with the best financial advisors, lawyers, CEOs, and executive coaches to help guide their decisions. These experts mitigate risk and provide clarity on crucial business moves. Billionaires invest in high-quality teams that help run their companies smoothly, allowing them to focus on growth and innovation. Executive coaches, who often charge millions annually, keep CEOs sharp and focused, ensuring they maintain clarity in their decision-making. This team approach is what allows billionaires to make big moves without being bogged down by the day-to-day operations. 12. Billionaires trade risk, not time. Unlike most people who trade their time for money, billionaires trade in risk. Whether they're investing in businesses, commodities, or media, billionaires are comfortable taking risks because they know that with great risk comes great reward. They aren't afraid to bet big when the odds are in their favor, and they have the financial cushion to absorb losses when things don't go as planned. The key for billionaires is learning how to mitigate risk while still making bold moves, and they achieve this through research, expert advice, and timing. These 12 secrets shed light on the way billionaires think and act. Their success comes from understanding that wealth is built by leveraging other people's money, trading in risk, and focusing on the long-term game. Financial Roadmap brings you these insights so you can start thinking like a billionaire today.